Good morning. Welcome to the XM.com weekly market update, and we're joined once again by the CEO of XM, Peter McGuire. Peter, welcome back.
Good morning, Andrew.
Plenty of activity.
What a week.
What a week, exactly. Data everywhere. So we're going to go, normally we start with the domestic market, but I think we'll go straight to the US. That's what's driving global markets everywhere. So first of all, the US 10-year and the US 2-year, the bonds there have obviously roared up in the last week. They peaked back in June of this year, and then they came off quite a fair
Savage.
way. Yes, but now we've got the 10s around that 3.7 mark.
Yep.
The 2s well over 4%.
Yes, exactly.
It definitely tells a story.
It certainly does, and there's obviously, if you look at Jay Powell's rhetoric, there's only one way that they're going to manage this, and it's going to be a hard landing, and they want to get it back to 2%, and we'll cover that a little bit further through the slides, but that's their mantra, and obviously many rate rises to come.
Yeah, and the market's definitely taking notice now. So.
Oh yeah, it's inhaling, and we saw the British pound collapse yesterday, but that'll. Yeah, it's all coming.
But like we said, the bond market pretty much drives everything else. So
sure does.
Obviously, and everything on the back of the inflation numbers, which are huge globally. And the central banks are trying to kill it with interest rates.
Yes, that's that. Well, that's it. You've summarised it perfectly, because that's the agenda. But are they going to be successful? And when you're looking at that core CPI, and you look at the CPI rate itself in red up the top, it's going to be a very tough winter across Eurozone and certainly across the US from the consumer side.
Yeah, and I think it'll be interesting when we move into the next earnings season in the US, which is not that far away now, to see what the impact of not only the higher interest rates, but that, I guess, consumer sentiment is on their spending habits.
Well, the S&P closed its lowest point for 2022 this morning out of New York. Here we go.
And this once again tells the story. So this is like, obviously, there's the price to earnings ratios. Now they've come off significantly for both the S&P and the NASDAQ, but historically still quite high.
Well, yeah, if you're looking at that, 14 times was your previous low, as it says there for the S&P. You're sitting at 21. I went to business school, so if you look at 14 times 5, it's probably overvalued significantly. I'm not going to say the number, but it's frightening. So if it gets back to 14, that's what cheap money does. And cheap money for a long period of time, and we're obviously out of that cycle now. So yeah, where do equities go?
Yeah, well, and I think with the strong US dollar as well, those huge US companies where a lot of their earnings are offshore.
Absolutely.
So they get hurt on the way back in.
Yeah, you wouldn't like to be in British pounds, being paid in pounds, would you? At 103 yesterday, you were at 112 on Friday.
We'll get to that, Pete. We'll get to that.
Yeah.
The bond market, once again, if we look at that, when the yield between the 10s and the 2s, it's in negative territory.
Absolutely.
And historically, basically, tells you we're heading for a recession.
Yeah.
If not already there in some places.
Yes. Well, exactly. The states have declared it, so, there's the next point. How deep does it go? And how many successive quarters do we experience this? So, I think there's some real hurt ahead of us. I'm not here to be a pessimist, but this is a great time to be trading.
Yeah. Over to the UK.
Wow.
So we spoke last week, didn't we? And it was around that 115 mark.
Yeah.
And we're now sitting, I know it jumped slightly overnight, so it's around that 105, 106 sort of mark.
Yeah, 106, even 107.
Yeah. So
we're at 103.50 this time yesterday. I got a call from BBC. What's the storyline? I said, I've never seen a market. I've seen Zimbabwe, I've seen countries in South America fall off a cliff. I've never seen the British pound do it in such, cratered. And we can only go back to, where we were in February, you and I together, March, 142, 140, nearly at that number for the pound, and now you're nearly at parity. A big wipeout, man.
Certainly is. So a lot of pain over in the UK at the moment.
Oh, been great to short.
Yeah, and another, this chart, this is a 10-year chart. It looks at the UK consumer confidence.
Yes.
I was looking at this chart yesterday. You can do a 20-year chart.
Yeah.
And where they are now is that the confidence levels is at their lowest in
decades.
Yes.
There was an interesting article in the Financial Times on the weekend as far as the new Chancellor of the Exchequer and the tax cuts, 45 billion, and the impact it's going to have naturally to inflation and consumer confidence. So, the hurt on Main Street is enormous. They've got energy prices. It's either going to be what they classify this year as heat or eat, and that really could materialise in the next matter of months.
Yeah, and the Exchequer, his comments were not well received at all over the last week.
Well, they wanted to have a meeting yesterday. There was talk that they were going to ratchet up rates, and they came out overnight and said, no, we're not going to move that quickly. We'll sit on our hands for a while, but, this is the impact it has. Cut rates, but, take it from one and give it to the other.
Yeah, exactly. So, obviously the VIX, which is sometimes referred to as the
volatility index,
or the fear index.
Fear index. Well, it's the index on S&P 500 options market, and the options, then the volatility of those options trading underneath futures. And here we are, we're at 32, man. It's starting to, it's gaining some momentum.
Yeah, so we've got that huge spike there, which is obviously back in 2020 when the pandemic hit, which is understandable. So,
yes.
But it's sort of creeping up to levels now, which, it's only been above this level, what is it, so maybe 3 or 4 times in the last sort of two and a half years.
Yes.
So
it's 4 years. Back to 18.
Yeah, exactly. Yeah. So it tells the story there.
It does. It really does. So look, it's exciting. US dollar. Have a look what's happening with the yen. Look at currencies. Aussie dollar at 64 odd. Yeah, man, it seems to be one-way traffic, and that's buying dollar.
And on our final slide, sums that up.
Wow. Yeah, for all the viewers out there, that tells the story. We're at 93. To the US dollar index, weighted at about 61% of that index is in euro. So we're at 93, and now we're at 113, 114 yesterday, 114.50 at one stage.
Yep.
And that really demonstrates, so if you're a traveller, an Aussie, what does it mean? Well, it means if you go to the States on a holiday, you need really an extra 25% buying power than what you had last year. So you need to have 25% more currency in your pocket to get the same bang for your buck. That's without inflation.
Yes, a lot of pain.
A lot of pain, man.
But like we said, it's just all the money's flowing into the US at the moment. So which you can look at it 2 ways, but it's very disruptive at the moment.
Yeah, well, our currency traders are absolutely ecstatic because of the huge breakouts that we've seen. Everything short, US dollar long, and everyone seems to be very, 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 very happy.
Yeah, so I know plenty going on, and it looks as though it's going to continue in the coming weeks and months. Obviously, there's going to be a lot of volatility.
We've got some fun ahead of us, mate.
Plenty of uncertainty out in the market, which the equity markets don't like.
No.
But that's the world we're in.
Can't get out of it.
Yeah, exactly. Anyway, that's great. Thanks for coming in, Pete.
Good to see you, Andrew.
Okay, and that is the xm.com weekly market wrap.